Nike. Two four 60 on gold. I'm if it goes in our bias 100%, bro. I'm actually aiming for my first successful nice trade, bro. I saw this on the Discord, bro. Freaking well done, Storm. Freaking well done, bro. I'm looking at gold potentially going to 2443. That's what I'm aiming for today. Oh, Storm. The vlog is done, bro. The vlog is done. Once I get the final thing, I'll upload on YouTube. Damn, nice job, MFS, bro. I unfortunately got out at BE with gold, but it was a really, really good trade. What's up, Ethan?
What's up, bro? Can you hear me?
Yeah.
Cool. Hello, everyone. What's up?
Fed chair power speech, Ethan, at 4, hey?
It's been at 4.
Yeah, 4 p.m.
Okay. There's still potential for a trade before then, but there will likely be low volume. Does my sound alright, or does it sound weird?
Sounds softer, but it's still clear. What's up, JD?
Is it better now?
Keep on speaking.
Is it louder now?
I think the same. Stembiso, no, I don't have a sell limit. I'm gonna market execute, bro. What's up, Scorpio? What's up, brother? Sheldon, what's up, bro? Hey, Ryan, what's up, bro? What's up, JJ? Yeah, Ethan, if you need the screen, just let me know, because I'm probably only going to take sales high up on gold, so I'm still waiting.
Okay, cool. I'm just logging in to my account.
Yeah, Aaron, Ethan will share his screen once he logs in and he has it set up. Right now, we're just looking at gold, but we're still quite far off from our sell zone.
Yeah, so the 5-minute candle should only be closing shortly. Just check. Okay, so the way it's sitting right now, I'll share screen in a second. We did have a break to the downside, but we're still within the range. Looks like it's sweeping in any case. So it's a good thing we didn't take any trades there. Just 1 second, guys. I'm just logging into my account still. Doesn't want to let me log into my account. It's weird.
You project gold to reach 2500 or go down. I would like gold to pull up to 2511, and then depending on what kind of confluence we get, I'll go short. Alright, I'll share my screen in the meantime. So yeah, essentially I'm looking for price to, I haven't entered a trade just yet, but at least for price to come to 2510, 2511, then go short. Brother, I'm new here. If you don't mind me asking a few questions, what's your win rate and average risk to reward ratio? Win rate, so you can see it on the results tab. Low mo. Let me just see if I can link it here.
Okay, I'm logged in right now. Okay, can I share my screen quick?
Yeah, there you go.
Okay. So essentially, we wanted price to break below the zone. It did, but it seems to have done a sweep. Luckily, we missed out on that trade. But it is still kind of within. If we had gotten in here, we would still be in by the hair of our teeth. I am expecting price to break above potentially, or I'm gonna want price to take out this low and then continue lower. So those are the two plays I'm looking for. I'm either looking for price to break up above or break below. So either one of these two will be here. So it could be either one of the two, to be honest. So yeah, it could really be either one. This is technically my funded account. So yeah, it's technically a 50k funded, but I still need to make up my buffer on that account. So because they have a trailing drawdown, and as soon as I make profit on it, it starts trailing my drawdown. So technically I need to get to 2,500, then I have created my drawdown, if that makes sense. Yeah, it is not ideal, but it's the same as taking a two-phase funded account, really. Yeah, Blue Guardian's a solid prop firm. They're also coming out with futures really soon. Does my audio sound okay on your guys' side, by the way?
Yeah, it's a lot better.
So let me know. It's a lot better. Okay. There's nothing like weird on your guys' side. Okay, cool. As long as it's working, that's fine. Just Okay, so let's see if we break below. See if a trade plays out for us here. So I'm not getting into position, I'm just sizing it up. We still need to wait for this candle to close below. Yeah, look, there's definitely going to be lower volume just based on use. So it'd be best potentially to stay out. You can see how it's ranging. On NAV, generally, I'm looking at like 1 to 2 always. Most people will know that. Yeah, one to 2 is typically sweet spot. Yeah, so you can see basically it took out the lows and it's just immediately went. So generally a sign that it could pop out to the top. Yeah, so we do streams Monday to Friday every day. I have to go just after 4. So hopefully we get it set up before then. Otherwise, Jamie will still be here most likely. Right?
Yeah, bro, I will be here.
Okay, cool. Yeah, that's kind of like the nice thing about futures is you can trade kind of without worrying too much about slippage, which is kind of nice. Yeah, I don't know. JMO is just busy today. Don't actually know. And yes, Liam, yes. So that's creepy. You're stalking me now, bro. And let's see, at 4 it might just break out, and then we take a trade on the breakout, but not on the breakout, on the close, and then we look for the retest. Well, I mean, Liam, given that that's like the only reason I had to leave the house, the only reason I leave the house, it's a pretty good prediction. No, we didn't take any trades yet. Let me try to turn my audio up. I was saying it was soft. Is audio better? Yeah, I used to play golf. It's Jay. It's Nasdaq. It's the same thing. It's just futures. The charts are pretty much the same there. Almost basically identical. The nice thing with futures is that all feeds are the same, so it doesn't matter what prop firm or broker you use. So I'm trading them quite often now, but still trading all kinds of prop firms regardless. Just enjoying futures. Generally, we take one trade a day. If we're pushing it, we'll do two. But I'm not a big proponent of taking two trades a day, because that second trade is always going to be emotionally charged, especially if you're taking that second trade based off of a loss. But even if you're taking that second trade based coming off of a winner, still emotionally charged, right? So the nice thing about this is you can get in and out quickly. The type of style of trading that we do, and then you're able to kind of come down off of either an emotional high or low. You're not trading based on either one of those emotions, and you can kind of become more logical again, which is what you want to do with trading. So that kind of aspect of our strategy kind of allows you to be a lot more level-headed, kind of built into what we do, which again, it's just something that's helped me a lot on my end. Yeah, exactly. That's another bonus, is not having to be on charts all the time. But also being on the charts all the time, sometimes you start figuring out, you start to come up with new trade ideas that make no sense, because you're thinking with your brain, not with your brain properly. You're thinking with your greedy brain. You just want to make money, or you lost money and want to get the money back. Got to think with your head and not with your heart in trading, unfortunately. You talking about normal props or futures props? Or it depends on the stop loss size, is always dependent on risk. So generally risk 1%. So calculate your lot size based on your risk percentage. Currently, I've shifted just to trading breakouts. ICT still works. Lots of people making tons of money on it. This just works better for me, better for my personality and my lifestyle. It's also a lot more. It's made me a lot more consistent. But ICT is definitely the strategy that made me profitable off the bat. Okay, so news hasn't hit, but that was quite a violent candle. Interesting. Let me think. Few minutes, yes. Yeah. But also the retest wasn't rejecting enough for me. So I'd like to believe that even if I was looking, that I wouldn't have taken that trade. But yeah, I wasn't rejecting how I like it to. So it could have potentially still been a loss. But I'd like to believe that my experience would have kept us out of that. News is hitting in 5 seconds. There you go. And this doesn't mean that it's breaking out, by the way. We need to see where it closes. If it closes above, and we see it retest, then we could potentially see it go longer. But we need to see what happens with the closure of this candle first. Because it could also just be one big wick and then it goes the other direction. Oh, sorry, Philia. I couldn't tell. We have a lot of female traders in here. We've actually got quite a few female traders in our mentorship as well. Weirdly enough, I think that the female traders that get involved are generally better than guy traders. Weirdly enough. Well, that's a rather large candle. Rather large candle. Oh, is Rocky a girl as well? Female? That makes it tricky because your screen name is tricky. See what the 4-hour structure is looking like. 4-hour structure wise. We are kind of in the middle of nowhere currently. So there's no real brick walls, but yeah, this is a very large capital to trade.
I'm short on gold right now. So I entered.
Hey, do you want to screen share?
Yeah, I can.
Yeah, because it doesn't look like there's going to be a setup for a little while now.
Okay, just scream if you need to go. Alright guys, so I entered here. Previously I told you guys 2510, 2511. I entered at 2509. You guys are well, it's coming back to entry. So SL is at 2526. Alright, so I'll type it out here and TPs as well. So SL 2526. TP1 is going to be 2500. TP2 is going to be 2480, and TP3, which is hopefully not a swing but could be, is 2450. So that's what I'm looking at, and I recommend guys go with a smaller lot size just because this is obviously a fundamental trade, so just be cautious. I'll put in a 500 lot, just say the word. So yeah, we're in here. You guys can enter now, but just make sure that you guys go with a smaller lot size than usual, because look, we are looking to catch this big move over here. All right.
Yeah, so we officially broke above that zone. So there could also be a potential retest. I just expect it to take quite some time, or it could just go without us completely. Which happens. Definitely. Okay, so I'm going to show you guys. Can I share screen quick? Because we might get an entry here. Okay, so we're coming back onto that zone. It is rejecting a little bit, but it is for the most part pushing. I'm gonna see more of a rejection. Okay, I've hopped into the position. But it's for some reason rejected me. But that is a valid trade. That's frustrating. So I didn't get fooled on that, but you saw me say I got in. It would be a break even right now, and about to hit TP very quickly. Who managed to get into that trade? Raheem is in. Nice. Andrew's in. Came caught it. A lot of you guys in the bench have already known what we were looking for. But also I had it marked up. So yeah, you should have hit TP by now. It's a bit frustrating. I don't know why my broker rejected me. So yeah, rejected my order. I placed the order, but it rejected me. It's a bit frustrating.
It was not because of news.
But no. I think maybe this account isn't set up correctly yet. Because this is my new live account. So I don't know if they were still waiting for me to sign something. That also, wait, I think that was actually exactly what happened, because I was rushing. Yes, that's what happened. I placed a limit and it rejected the limit. That's frustrating. It happens, man. But it's still a very, very good trade. Like, no drawdown at all. Damn it, it's going up. Even if you got in like a little late, like up here, you would still be smiling. And I used a 25 pip stop. Yeah, I would definitely order with use a limit order. I mean, a market order, not a limit order. Angie hit TP. Tyron hit TP. Well done, bro. Most of you who hopped in should hit TP. Brits hit TP. BMAC got rejected as well. Yeah, I'm glad we hopped into that. Even though I was dumb and pushed the wrong button. Push the button though. Push the wrong button. TP would run on my account delayed the order execution like 1 second after I pressed buy. But Jay, did it tell you though? Yeah, but did you still TP though? Okay. You still get profit? I'm assuming it's on one of your live accounts as well. Try if you can, man, not to close early, even if you get a bad entry. Rather go break even. But yeah, I guess that is safer. Because you never know what it could have done, to be honest. So actually, you did the right thing. Yeah, I would be closing out the trade, to be honest with you. It's quite overextended. It depends on you. So I sometimes allow trades to run, but the trades that we take are short-term trades. They're scalp trades. So you need to be very cautious. Oftentimes you'll see it'll come back and then go again, but it's because we're taking such short-term trades. We're literally having a lower time frame reaction and using that to push us forward. I have to go, guys, so I'll leave you here with Jamie, but that was a great trade. Double top says he passed 2 top step combines. Well done, bro, well done. And a bunch of you guys took TP here, so yeah, good day, good week actually. We've had many winning trades this week. I think we had 3 winners this week. I don't know if I think we took maybe 1 loss. Maybe, I can't remember. But yeah, I'll see you guys on Monday. We might do a weekend stream as well. Maybe just a chilled one, answering questions, play some games, whatever. That'll be fun. But I'll leave you guys here with Jamie. We'll keep watching gold. So yeah, cheers guys. Cheers, Jamie.
All right. Let's see. I can't share my screen for some reason. I think Ethan must have. Wait. Okay, guys, I have to end this and then come back on. I have to end this and come back on because I can't. Yeah, he closed without closing. All right, so yeah, I'm disconnecting. I'll come back on. All right. There we go. So currently grab short entries at 2510. I have entries from 2510 and 2511, and SL is at 2526.35. Can you guys hear me? No? Oh, you can. Okay. Yes, bro, I'm in. But if you guys are jumping into this trade, please use low risk, purely because this is obviously a fundamental pump. Let's see what the next 15-minute candle does. We have 40 seconds. New 15-minute candle. Let's see what it gives us. Does anyone know what happened at the Fed Chair Powell speech today? Does anyone know what happened? I know they mentioned about interest rate cuts in September. Powell is talking now. Let me try to see if I can find it. Okay, got it.
Reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years. As we begin this process later this year, we will be open to criticism and new ideas while preserving the strengths of our framework. The limits of our knowledge, so clearly evident during the pandemic, demand humility and a questioning spirit focused on learning lessons from the past and applying them flexibly to our current challenges. Thank you.
All right, well, is that it? I think that's the speech. So right now, trade's roughly coming back to entry. Let's see if we can get a nice dump here, guys. A nice dump. $2,503. So once price goes to 2,503, guys, we move SL to BE. All right, 2,503. TPs are on the chart, Storm, over here. $2,515. Yeah, good entry, bro. Really, really good entry. All right, let's freaking go. Let's freaking go. Let's freaking go, guys. Based on Pearl, literally, Pearl is going to carry us to TP3. Let's just try to get SL to BE and then we can smile. New 5-minute candle. Let's see what it brings. What's up, Mobile? What's up, bro? Alright guys, what entry did you guys get? Out of curiosity, type in your sell entry on gold now on the chat. Just let me know what entry you guys got. 2513, 2512, 2508, 2512, 2507, 2513, okay. Damn, you guys got some high entries. 2550 on futures. Amazing, guys. Jeez. Okay, so I'm seeing a lot of 2508s, right? A lot of 2508s as well. Let's take a look at the 15. Right. Yeah, I agree with you, Liam. About 8 more minutes until that. Damn, nice, bro. Let's hope we can. Gemma, we're on a short in gold, and Ethan hit TP on Nasdaq. Storm, don't take these trades on your $100 challenge, bro. That we're only going to do on the other group. I mean, you're welcome to, but yeah. Hey guys, let's see. We could be getting a retest on this trend here. Also filling 50% on the 5 minute. New 5 minute candle. Paul's done speaking, bro. Yeah, he's done.
Inflation was likely to pass through fairly quickly without the need for a monetary policy response.
Okay, this is
In short, that the inflation would be transitory. Standard thinking has long been that as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one. with most mainstream analysts and advanced economy central bankers on board, I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course, and that demand would rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021, although progress came slower than expected. The case began to weaken around mid-year, as was reflected in our communications. And beginning in October, the data turned hard against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, and after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China. High rates of inflation were a global phenomenon, reflecting common experiences: rapid increases in the demand for goods, strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million jobs from the middle of 2021. This increase in labor demand was met in part by workers rejoining the labor force as health concerns began to fade, but labor supply remained constrained, and in the summer of 2022, labor force participation remained well below pre-pandemic levels. There were nearly twice as many job openings as unemployed persons from March 2022 through the end of the year, signaling a severe labor shortage, and inflation peaked at 7.1% in June 2022. At this podium 2 years ago, I discussed the possibility that addressing inflation could bring some pain in the form of higher unemployment and slower growth. Some argued that getting inflation under control would require a recession and a lengthy period of high unemployment. And I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023, and we've held our policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. A word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced, without the need for economic slack, so long as inflation expectations are anchored at our objective. That's what the model said. But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy, and specifically in the labor market. An important takeaway from recent experience is that anchoring inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchoring inflation expectations which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years. As we begin this process later this year, we will be open to criticism and new ideas while preserving the strengths of our framework. The limits of our knowledge, so clearly evident during the pandemic, demand humility and a questioning spirit focused on learning lessons from the past and applying them flexibly to our current challenges. Thank you.
Jeff, the topic for the symposium is reassessing the effectiveness and transmission of monetary policy. So it's a super important topic, particularly right now. And we've got some great papers lined up for this morning. We've got 2 papers, and we also have a panel lined up for that. But before we get to any of that, I am delighted to say that we have Federal Reserve Chair Jay Powell here to deliver opening remarks. So with that, let me welcome Jay Powell to the podium.
Thank you, Karen, and thanks to our host from the Kansas City Fed. It's great to be back here today. 4.5 years after COVID-19's arrival, the worst of the pandemic-related economic distortions are fading. Inflation has declined significantly. The labor market is no longer overheated, and conditions are now less tight than those that prevailed before the pandemic. Supply constraints have normalized, and the balance of risks to our 2 mandates has changed. Our objective has been to restore price stability while maintaining a strong labor market, avoiding the sharp increases in unemployment that characterized earlier disinflationary episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low. So let's begin with the current situation and the near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so. Prior to this episode, most Americans alive today had not experienced the pain of high inflation for a sustained period. Inflation brought substantial hardship, especially for those least able to meet the higher costs of essentials, like food, housing, and transportation. High inflation triggered stress and a sense of unfairness that linger today. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Turning to employment, in the years just prior to the pandemic, we saw the significant benefits to society that can come from a long period of strong labor market conditions. Low unemployment, high participation, historically low racial employment gaps, and with inflation low and stable, healthy real wage gains that were increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%. Still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. The hiring and quits rates are now below the levels that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose and why it has fallen so significantly even as unemployment has remained low. There's a growing body of research on these questions, including Gary Eggerson's work, which we'll shortly discuss. And this is a good time for this
4 more minutes until the next 15-minute
It is,
handout.
of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks. As so often happens in times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession in mid-2020, the economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020 and again in early 2021. Spending recovered strongly in the
What's that
first
like?
half of 2020.
Is that close?
The ongoing
Basically,
pandemic
we're
shifted
in
the pattern of
SLTBE.
recovery. Lingering concerns over COVID weighed on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023. Supply chains were snarled by a combination of lost workers, disrupted international trade linkages, and tectonic shifts in the composition and level of demand. Clearly, this was nothing like the slow recovery after the global financial crisis. Enter inflation. After running below target through 2020, inflation spiked in March and April 2021. The initial burst of inflation was concentrated rather than broad-based, with extremely large price increases for goods in short supply, such as motor vehicles. My colleagues and I judged at the outset that these pandemic-related factors would not be persistent, and thus that the sudden rise in inflation was likely to pass through fairly quickly without the need for a monetary policy response. In short, that the inflation would be transitory. Standard thinking has long been that as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one. With most mainstream analysts and advanced economy central bankers on board, I think I see some former shipmates out there today.
All right, we're just listening to the same speech back to back. Guys, 24 more seconds until next 15-minute candle. Let's just see how it's looking. Okay, that's a 30-minute, just ignore that. Five seconds. We should hop on a call again, but in terms of coming back, landing for September. Oh, is that for Liam? What's up, Mo? My trading view is a little bit delayed compared to my MetaTrader. Slightly, I think. Yep, it is delayed. Yeah, mine too. Yeah. Alright guys, just make sure that you mark up the zones on your MetaTrader for BETP as well. I haven't marked here, so I'll let you guys know, but it's like a couple seconds behind. To get a job. Bro, Jamie, can you translate his speech? Does it mean bullish or bearish on gold? So essentially what they said that they're on track. So therefore, the dollar should strengthen and thus gold should short. But he didn't necessarily, from what I heard from the speech, he didn't necessarily give us a timeline. I think from the speech he just said that he's on track, but previous research that I did, they did say September, so next month. But yeah, inevitably this trade should be valid, aligned with his speech. Alright guys, price is actually a little bit further than on my MetaTrader. It's 2506 right now. So it's just 2 points behind. It's approaching BE. Price on my MetaTrader right now is 2505. And we're moving BE at 2503.8. Alright. I don't like that it's so delayed. Jamie moved to BE line a stronger support than I haven't actually used moving averages in ages. Alright guys, we're approaching BE mark. We're approaching BE mark. So short. Alright guys, SL to BE now. SL to BE. SL to BE. So SL should be at BE. I have a position, it shows here 2509, but it's 2510 and 2511. So I have another position at 2511, which is pretty close to the first entry. Oh no, bro, BE means break even. So you move your SL to break even. Do you have that Fireball song in your head because of the notifications? Hey, NB Trading? Me too, bro. Me too. Yes, bro, we're at break even. Damn, nice, bro. Did you close at BE, Raheem, or what? That's amazing, though. Congrats. No, bro, BE isn't too quick. Rather safe than sorry. I went PE. Okay, nice. My Fun Pro trade. Damn, nice, bro. Sweet JJ, always a pleasure, bro. Have a good one. It was intense to get 20k though. I was aggressive with it. Damn. At least it paid off, bro. At least it paid off. High risk, high reward. Nice. Mott Conning, what entry price do you have? Jesus. What's your entry price, bro? Okay. Yeah, so guys, when I did tell you guys to enter, you guys might have gotten out at BE now. Rather stay out. Okay. I do have another entry at 2511. So I know there's a few people that had entries at 2513, 2515. Just make sure that your SL's at BE. I wouldn't recommend entering again because then you're essentially waiting until you're at BE again. How many guys got kicked out at BE? Liam, sorry bro, still in. Took a small profit. Alright, so my exact thing, 2511.40. Bro. So that's essentially where my SL is at BE with my other position. Okay, nice. I'm still in, but it was a bit higher, 2507. Okay. Yeah, if you guys got out at BE, rather just stay out. Especially if it breaks trend again. Oh, I saw that one, Liam. You nasty for sending that, bro. Nasty. Oh, yeah. Guys, I'm out at BE. Yeah, I am out at BE. Came close, but yeah, I'd rather stay out. And knowing us, especially with gold at this time, if we get in another position, we might be here for a good old 6 hours. So that's done for the day, guys. Rather a BE than a loss.